So basically what we're getting is a multipolar world. Now, people, I think, are arguing that that new environment is likely to be a tailwind for a neutral, decentralized, non-government asset like Bitcoin. Welcome back to Bitcoin.com's The Weekly, where The Weekly, by the way, is the world's #1 recap and digest of the biggest stories in the Bitcoin and cryptoverse. My name is Graham Stone, and I'm joined by David Sensel as usual. And this week, we've got continuing tariff-related market chaos, the phasing out of capital controls in Argentina and what that means, and Democrats in the U.S. pushing back against the Department of Justice's crypto enforcement retreat. Before we get into it all, if you like this content, don't forget to follow us, hit like, and light us up in the comments. We don't know what we're talking about, except sometimes we do a little bit. Also, don't forget to subscribe to David's weekly newsletter, which is entirely free and contains a full weekly download of David's autistic gigabrain. And David is fully into the space. So it's a good read. All right, let's get into it. Tariff madness.
Yeah, last week was crazy. Tariff news whiplashed the market. Last week, Donald Trump temporarily paused the tariffs for 90 days, sparked a rally in both Wall Street and Bitcoin. Bitcoin, which went up past 82,000. That initial reprieve, particularly for consumer electronics, gave hope to tech companies and fueled optimism about a possible U.S.-China trade deal. However, the relief was short-lived as officials clarified that the pause was strategic, not permanent, and the new tariffs potentially looming for smartphone semiconductors and the electronic supply chain are coming. Trump reinforced his stance in a post this morning, denying any true exemption and emphasizing a tougher trade posture towards China, signaling that the tariff clock is ticking once again.
Just stepping in there for 1 second. So at first, it seemed that there was going to be exemptions on certain, like, let's call them the tech tariffs, but that was not the case.
No, it was not the case. We still don't know what kind of tariffs or controls or bans are coming, but we've been promised first by Lutnick and then now by Trump in this Truth Social post. So we'll see what happens on Monday, I guess. The center of all this, though, of course, was the U.S. and China kind of trade war escalation that happened last week. The U.S. imposed a 104% tariff on Chinese imports. This was raised to 125%. China retaliated, increasing its tariffs from 84% to 125%. And now, I think again this morning, China also announced that they were banning exports of some rare earth minerals to the U.S. So we're having this kind of ratcheting up of the trade war, moving from tariffs now into just straight up banning certain things. Again, pretty wild stuff. I'll just kick this off kind of with what I see as the significant thing here. This is obviously, I think, the reshaping of the world order, and the U.S. has in effect kind of drawn a line in the sand and said either you're with us or you're with China in terms of trade, but not just trade, but kind of spheres of influence.
Yes, and many people have been talking about where this is all headed, with the suggestion that we're heading towards a new sort of Bretton Woods, a new accords that reshapes the financial system that we've sort of had here for the last 80 years.
Yep. Anything else that you think is significant to this, Graham?
Well, yeah, I mean, as it relates to Bitcoin, right? So, like, what does this all mean for Bitcoin? Now, some people, I think, are of the opinion that with this, call it new multipolar world, so you've got for a long time, right? It's been just the U.S. Okay, now for sure it's looking like it's at least the U.S. and China, possibly more than two poles, and there may be a BRICS pole or a Euro pole. So basically, what we're getting is a multipolar world now. People, I think, are arguing that new environment is likely to be a tailwind for a neutral, decentralized, non-government asset like Bitcoin. And one of these people in that camp, I think, is Lynn Alden, who is a respected commentator in the Bitcoin space. And in an interview on Monetary Matters just a few days ago, basically she said, all right, if you do manage to reduce the trade deficit, and what that means is there's fewer dollars going out into the world, then there has to be weaker demand for the dollar eventually, and it forces the world to use other assets. Now, like this process is already underway, and it's been underway for arguably since the 2008 recession, like the great
GFC, Great Financial Crisis.
Great financial crisis. Thank you, David. It's since then there's been a secular bull market in gold, and like a gradual moving towards gold. And the thesis is that Bitcoin with its like superior characteristics relative to gold, at least in the digital era. So obviously it's easier to move around, maybe even it's scarcer than gold. Bitcoin benefits in that environment. If that's the case, right? If Bitcoin does benefit in this new multipolar environment, you might be asking yourself, why hasn't it pumped, right? We've seen gold pump to historic new highs here in the last few days. Why hasn't Bitcoin done the same? And I think the answer to that is that it'll just take time. So as we know, Bitcoin is kind of a chameleon of assets, right? You have it reacts differently in different scenarios, and you have different types of Bitcoin investors. So there's some people who see Bitcoin as a risk on play, and like similar to tech, and that group of investors might be exiting the market right now. On the other hand, you have like the Bitcoin OGs, and they've always seen Bitcoin as a bet against the traditional order, which is breaking down. And the argument is that more new market participants are likely to see Bitcoin in that light as the bet against the traditional order. And I think we've already seen that with the likes of Larry Fink basically saying that a few weeks ago.
Well said. I haven't watched the Lynn Alden appearance on Monetary Matters, but I'm going to. The one thing that comes to mind from that, though, is something I've said many times on this show, which is the rest of the world owes each other dollars. In fact, they owe each other dollars more than they owe the U.S. dollars, right? So this is a Brett Johnson take. I'll get to Michael Cow in a second. So if the U.S. stops taking on all this debt, right, increasing its deficits, Lynn is right that the number of dollars in the world shrinks. But ultimately, what this also does is it causes an incredible amount of pain to the rest of the world who cannot print dollars, and they need to pay each other. They need to pay the debts to each other in dollars. So it's a situation where, yes, you can move away from the dollar, but to do so, it's going to cause an incredible amount of pain to those countries, and not at the cost, not necessarily at the cost of the U.S. in that respect. So again, could it happen? Will it happen? Eventually, yes. But I don't know if the rest of the world has the appetite for the amount of pain they will cause themselves, right? Anyway, I look forward to listening to Lynn Alden's take and see if she has an answer to that kind of fundamental situation. Onto why Bitcoin hasn't pumped, or whether it will pump, or how much it will pump. I'd recommend everyone to kind of follow this gentleman here, Michael Cow. He talks about this concept that he calls the sword of inelastic demand, and specifically how it relates to Bitcoin, which is a fairly inelastic asset. In Bitcoin, you have a fixed amount of supply, basically fixed amount of supply, right? Like it's still coming out, but very slowly. And the majority of Bitcoin is held by hodlers, right? And this creates a much smaller amount of circulating supply than even the small amount that is the total supply would indicate. And thus this circulating supply is fairly inelastic in terms of like the amount of liquidity, right? The amount of demand and the amount of buying and selling of Bitcoin is pretty small. And what this means is that the price can go up a lot really quickly, but the downside, because it's a double-edged sword, is it can go down a lot as well very quickly. And the hodlers don't care one way or the other, right? They're going to hold when it goes down a lot. They're going to hold when it goes up a lot, and it creates this dynamic where this actually amplifies the price action, right? Because all the price is kind of the marginal buyer or seller, right? And so if most of the circulating supply of Bitcoin is not going to be bought or sold, then that marginal buyer or seller can really, really change the price of Bitcoin to the upside or to the downside. And I would just say, if you're in crypto, you kind of know this a bit, but also you could have a situation where if there's like a lot of market volatility, if things sell off, if people get scared, if institutions start to hedge a little bit, you can see the price go down a lot as well as going up. And that's kind of the situation you see in the oil markets as well, right? So just a word of caution, and having the price pump super high to the moon means that it also can go down really, really low. Anyway, those are just some thoughts on that. I would like to introduce this next segment, Graham, and just hear your thoughts, and then if anyone in the comments has any thoughts, I would welcome that too. Which is to say, taking a step back from the tariffs themselves and kind of looking at the meta situation, kind of the news creation or the punditry around the tariff stuff. Man, it has been very difficult for me personally to navigate this current market, because the people that I have followed and I respect and I pay attention to for the past couple weeks have had their opinions diverge kind of significantly, and it makes it so much harder to know what I think about this current market and where it's going when pretty much everyone I follow has a fairly differing view from the other people that I follow, right? So then there's very little consensus, and so you get this kind of like, and it's not just that they're divided on one issue, like tariffs good or tariffs bad. The people who maybe think that tariffs are good, like that camp, then they'll also disagree pretty substantially on a sub issue that comes out of that. For example, you have people who think tariffs are good. You have people who think tariffs are bad. So let's take those people who think that tariffs are bad. Within that group, you have people who think, oh, this will cause U.S. assets to fail and fall. However, Bitcoin will succeed, right? But others think that no, Bitcoin will also fall, right? So then that puts another big difference between these people. Then within the people who think, oh, Bitcoin is going to succeed, however, you have these subgroups that are like, yes, Bitcoin is going to succeed and China is going to do really well from this. So buy Chinese equities or be bullish on China. And then some people who also think Bitcoin is going to succeed are like, no, China's also going to do very poorly to this. So I don't know. I found myself kind of very unsure for the first time in quite a while. I don't know if you've had that experience, Graham.
It's I would say in some ways inevitable, given that like how big of a sea change this is, right? We're talking about a potential reordering of the entire global financial system, a la a new Bretton Woods, like the new like the Mar-a-Lago Accords, and there's a million permutations for how that could go. So I don't think it's surprising that the experts disagree, and within the different permutations, right? There's like so many, yeah, as you've described, a binary tree, and it breaks down, and there's so many different pathways that we could go. So let's in some simulated multiverse, things will work out exactly as we hope. So let's make sure that we get into that dimension.
Yeah. So we just on this kind of related to this topic, we had a question talking about BRICS and saying like, do you see India stepping away from BRICS and staying with dollars? Staying with dollars is bearish for Bitcoin. I personally think that BRICS is kind of a sham to begin with, and I don't think that the BRICS nations like each other very much. And I think if you look at like the euro has been, I think, somewhat, it's not a failure, but it hasn't been what everyone thought it would be, this like kind of competitor to the dollar, right? And the European Union is made up of contiguous countries, right, that have more of a shared history than these disparate BRICS countries who actually actively hate each other. So what hope really is there of a BRICS currency ever being truly successful if you have something like the euro really not be able to do that? So I see it as kind of like a, I don't know, some kind of dream that the BRICS would ever be successful.
Yeah, I know what you're saying there. However, I do think there's an element of the friend of my enemy is my enemy, and the enemy of my friend is my. How does that go? It's something like that, right? So, even though these BRICS nations aren't exactly best friends, if they have a reason to work together on something, it's more likely to succeed. And it may not succeed massively, but as it relates to Bitcoin, the more you get this multipolar world or perception of a multipolar world, the more it makes sense for an asset like Bitcoin to actually be adopted and used, whether it's as a safe haven or actually used as a medium of exchange in cross-border trade.
To answer the person's question directly, I don't see India. I don't see India entering the BRICS really in any kind of capacity. I bet that they are probably trying to step away from the dollar a little bit. I think everybody is. Whether that will be successful or not, that's kind of still up for debate. That's kind of what these tariffs are kind of about a little bit. And then, is it bearish for Bitcoin? I think all of this stuff is at the very least bullish for Bitcoin, right? I don't think any of this volatility and worry
this
about
uncertainty is. I think it's an environment where Bitcoin thrives.
Yeah.
Now, as we've mentioned, there's likely to be short-term volatility, and it could be to the downside. So be cautious. Let's talk about Argentina for a moment, because this is pretty interesting. So basically, the Argentina is getting an additional $20 billion line of credit from the International Monetary Fund, the IMF. Now, that brings their total debt to the IMF now to $67 billion. And at the same time as taking this additional money debt from the IMF, Argentina has made moves to end currency controls. So specifically, they are moving towards letting the market decide what the price of the Argentine peso is relative to the US dollar. Although it's a kind of a gradual rollout, so there's some restrictions for now. It's like there's a band where the peso is allowed to trade in, and that band with this new law or policy in place is going to expand at 1% per month. So this means that the market price of pesos will be allowed to be more accurate over the next several months and years, assuming this policy stays in place. And the IMF line of credit, presumably here, is actually used to help ease that transition. So I think this is significant for a few reasons.
Yeah. So maybe the first thing to talk about this is that we'll get to see some kind of information, maybe like an experiment of how stablecoins work in a country that is moving from a kind of pegged currency or fixed currency to a floating one, in terms of whether you see kind of a net inflow of stablecoins into like their traditional financial system, i.e., out of stablecoins into the traditional banks, or if you see like a net kind of increase of stablecoins into Argentina in general, right? So I'm doing a bad job of this, but basically, are people in Argentina going to be buying more stablecoins from this news on net, or are they going to be selling more stablecoins, right? And you can kind of see both sides here, right? Like if now Argentina is able to get normal Argentinians are able to get access to dollars, that presumably would decrease the need for stable coins, which I think were kind of a gray market for them anyway. And they were a hedge against the volatility of their local currency. So perhaps stablecoin usage and volume will go down over time, right? Now that they can get hold of real dollars. On the other hand, you could see that now that stablecoins, now that dollars are legal to hold, that gray market, that gray zone that stablecoins were in should be cleared up, and then you might see just an overall increase of stablecoins because now people are less worried about them, and they could use them even more.
Especially since presumably the stablecoins are actually like a superior product to dollars in the TradFi system, right? Like
especially in emerging markets, right?
Yeah, US dollars on blockchain rails are superior. You can move them permissionlessly, lower cost, 24/7. You don't have to wait for the bank. So,
and they're already in use.
Yeah, they're already in use. As networks effects is there. If the gray zone legitimacy of them dissipates, you might see increased adoption. And we should just mention that so far, right, the market seems confused. There's a 100% increase in the volume of stablecoin trading in Argentina, but it's like at first it was a net outflow, and then there's a net inflow. It's kind of balanced out. People aren't really sure, I think, yet what this means.
Yeah, and how to play it, right? Like they don't know.
Exactly. And I think we should just mention one last thing, which is, what does this mean for Bitcoin, right? I think it's a similar scenario. When a government moves to end its capital controls, presumably that makes Bitcoin less desirable, less needed as a hedge. On the other hand, when a country removes its capital controls, right, maybe the country's economy gets better, and like a lot of these countries actually have restrictions on holding Bitcoin, so it makes it easier to get it. So maybe that actually just means more net buying of Bitcoin, although perhaps not as much as less as used as a hedge, more used as just like an investment, speculative investment. So interesting to watch what happens here. We'll be following this story Last one for today. David, could you tee it up?
All right, so the U.S. Democrats are at it again. Democratic senators have blasted the DOJ for disbanding its crypto crime unit and scaling back enforcement. They are warning that the move to kind of close down this enforcement unit enables money laundering, sanctions evasion, and other criminal activity. And they are demanding that the DOJ reverse course and provide answers. Same old song from the Democrats. What are your thoughts, Graham?
Yeah, well, I think it's interesting that, as we discussed before the show, okay, so the Dems are still trying to make this crypto a wedge issue, and I think, David, you thought this was annoying. This is just annoying. We thought this would go away. That people, it just doesn't seem like a good strategy for nobody's really gonna come over to the Dem sides. Their base is going to be applaud them. Yeah, good job. But it's not going to actually convince people to vote Democrat. So this doesn't seem like a good political issue. On the other hand, I think this is good that they're pushing back on this. I think people should, in the U.S. democratic state of things, they should be questioning, is this pulling back of enforcement in the U.S. connected to some kind of political corruption? The Trump's family's heavily involved with crypto. Is there a connection there? I think that's a fair thing to question.
I mean, I agree with the corruption angle, and I'd rather have this unit still be active personally, because there is a lot of messed up things in crypto. Anyone who's been in the space long enough knows how just terrible it can get. However, more than just annoying, it's bad for the Democrats to be on the wrong side of crypto. It'd be like the Democrats being against the internet in the 90s. At least that's how I view it, right? It's just stupid, right? Crypto is I think a net good. And it makes me worried that, like, let's say Trump and the Republicans really mess things up here in the next 4 years, which is distinctly a possibility, and then the Dems get in power. Man, that could be very bad for crypto if they still are on this kind of stance that crypto is a bad and is kind of just used for money laundering and cronyism, and it's a Trump's way of enriching himself and stuff like that. I just don't want this to be a partisan issue, basically. And I don't think it should be. That's it.
Yeah. Well, that is it for this week's The Weekly from Bitcoin.com. Catch us next week, this time next week, for the world's #1 Bitcoin and crypto recap and digest.